Hello, guys. Hey, guys, can you hear me?
Yeah. Hey, Marcus, how's it going?
Okay, 1 second. I think the audio is quite working.
We can hear you.
Hey guys, can you hear me?
Yeah, perfect.
Hey, Marcus. Yeah, I can hear you clearly.
Okay, that's great. So we're at 5 p.m. right on the dot. So
Hey
we might
guys,
right now.
okay, hold on. Try. Hey guys, can you hear me?
Yes, loud and clear.
That's a bit odd. Hello? Can you guys hear me?
Hey, Marcus. Yes, coming through.
Yep.
Coming through.
We can hear you.
Okay, fantastic.
Okay, awesome, cool. So we're actually 5:01, so pretty much on the dot. So good evening, everyone who's joining us from Singapore, Australia, and of course any other Zipster who's joining us from around the world. I'd like to thank you very much for taking your time to join this AMA with Marcus Lim, co-founder and CEO of ZipMex. We wanted to take this opportunity to cover the recent market volatility we've experienced in crypto and beyond, and also cover any questions our community have had around ZipMex and also ZMT. We do have a few slides we wanted to kick this AMA off with, which will cover some of the macroeconomic drivers. And afterwards, we're open to taking any questions from the community through Facebook or from YouTube, where this is live in. So Marcus, over to you.
Fantastic. Thanks, everyone. And yeah, I'd like to thank everyone for attending today's AMA session. Great to connect with all of you, especially during a very interesting time in the crypto market, which I'm sure all of you guys have a ton of questions to ask. So I'm happy to try to answer all of them to the best of my capacity. So just to kind of give you guys a bit of a brief introduction to ZipMex, we're a digital asset platform. We allow our customers with the ability to essentially buy and sell digital assets, earn yield, make payments. That's only currently in Singapore. And also we're looking to explore, the Web3 verse, I like to call it, which is the NFT space, and also the metaverse. So we have a lot of exciting stuff that's coming up within ZipMex. We're 4 countries, Singapore, Thailand, Indonesia, and Australia, fully licensed in Thailand, about to get licensed in Singapore, and then in the final process in Indonesia. And Australia, we're waiting, for the licensing regime to come out. So I guess, kind of looking at the crypto market very recently, there's an explosion of different events that have happened. I guess the most, the most prominent one is, the UST peg, which was caused last week on Thursday. And, we saw a precipitous fall that happened. But I guess, kind of looking at why the markets are where they are right now, I think we need to kind of cast our minds back to essentially an also very unpleasant event, which is, back in 2020, where essentially, the WHO announced that we are currently in a pandemic and the entire world shut down. And so, the governments around the world, basically what they did was they printed a lot of money and they reduced interest rates to almost zero. And what that meant was that there was a ton of money flowing into the system, which is the circulating of supply of money, which is M2, and also interest rates being at zero. That meant that, borrowing costs was basically 0 to none. In some countries or some areas such as Europe, there were negative interest rates. So effectively, the bank would pay you money to actually borrow money from them, similar to kind of Japan. And so if we looked at that, that was about 18 odd months ago, or probably more than 18 months, about 2 years ago now. And so what we saw was probably the best or biggest bull run ever in the crypto market and also in the stock market. We saw kind of S&P 500 kind of peaking out at 4,600 back in November, December of last year. And also Bitcoin going to as high as like close to $70,000. And so as a result of kind of all this quantitative easing, and also with very cheap money that's floating around, this has caused inflation to spike to an all-time high. So if you kind of look at where we are now versus kind of where the pandemic happened. During the pandemic happened, we had record unemployment rates. Now we have record, employment rates. So we went from, basically 0 to 100. And where we are now, essentially, is the economy has overheated tremendously, as we can see with inflation figures. And inflation, is impacted by two things, right? Just going back to basic economics of supply and demand. And typically with inflation, it's demand driven, but what we're seeing is unprecedented, and that is supply and also demand happening at the same time. And this is causing a huge kind of uptick in inflation. In the US is at 8.5, which is what the CPI figures shown this month. And so, with the supply chain shock that we've seen, for example, the Russia-Ukraine war, having shocks in terms of kind of energy prices going up, we've also kind of seen the extended kind of lockdowns in China, which is basically causing a lot of supply chain issues. Our goods and services essentially have gone up. And when they've gone up, then basically prices have to be increased. As for most businesses, they have to kind of make sure they're profitable, and therefore us as the consumers would have to pay more for our daily kind of goods and services. And I think one kind of key thing to kind of take note, which I get asked a lot, which is why is the crypto market correlated to the financial market, and the correlation is at 0.7. So the correlation is there's a scale of 0 to 1, 1 being 100% correlated and 0 being 100% negatively correlated, and we're at 0.7, which is very, very correlated. And I guess the kind of the simple answer to this is that a lot of people that actually invest into crypto also invest into a whole bunch of different asset classes as well: stocks, bonds, property, etc. And so when the market corrects, people typically take risk off the table, which is they would actually sell. And then when they sell, they typically sell across the board. So they sell gold, they sell bonds, they sell stocks, they sell crypto. They may sell even their property as well to make sure that they have enough cash flow within, their household to be able to sustain for the next, 1 to 2 years, for example. So this is why kind of the crypto market is correlated to financial assets. And even though the narrative of Bitcoin or crypto is supposed to be uncorrelated, so typically the Federal Reserve increasing interest rate should not have any kind of impact in terms of the actual supply of Bitcoin out there, which is a total supply of 21 million. So because of the way people construct their portfolio in terms of how they invest, this is the reason why there's a correlation when they do buy and when they do sell. So kind of going back to the previous slide there. Yeah. So I think in terms of what we're expecting here now is that the Federal Reserve has made it fairly clear, and I guess I'm kind of using the US as an example because the US is basically the standard that everywhere else around the world kind of follows. And so with the US kind of has already increased interest rates to 75 basis points. So they did 50 basis points in the last FOMC, and then 25 basis points in the previous FOMC. And they're looking at probably the next 5 to 6 rate hikes at a maximum of 50 basis points. And so when you have interest rates kind of increasing, typically, business, credit becomes more expensive, everything from kind of, for businesses to borrow money and also for households to borrow money for their mortgage. That kind of reduces your disposable income as your loan repayment has gone up. So you have less to kind of spend for discretionary and also disposable. And then on top of that, you've got increasing inflation as well. So what the central bank is trying to do is just to reduce demand, even though on the supply side, they effectively have zero control. They're trying to reduce demand so they can kind of keep inflation down within the target band of 2 to 3%. And that's kind of typical across the board for all economies around the world. And because they've reduced interest rates, they've increased interest rates, the future, when people, when a lot of analysts kind of value assets around the world, there's a fairly standard formula that's being used, and that's the CAPM model. And they basically use discount free cash flow, and that is an impact on actually discounting free cash flow by using the actual interest rate, which is the risk-free rate. And so when the risk-free rate goes up, then the actual asset value actually goes down. So so basically, Wall Street and also around the world, all financial markets have started to kind of reprice, the value of assets. And this has caused the correction that we've seen, essentially kind of starting, call it December, January, all the way till now, and what we've seen now in terms of where the S&P 500 is at, which is, has gone as low as 3,800. Bitcoin obviously has, I wouldn't say completely bottomed out, but, it touched at 25,800. And so has, all the other kind of asset classes and also crypto as well. And so where we are now, I think, is a really interesting time. And I think, for a lot of our audiences, what I'd like to advise is obviously, for some of you guys, this does kind of present itself as a great buying opportunity because Bitcoin has corrected by more than 50%. For those of you guys that are squarely kind of focused into crypto, I know a lot of people are transitioning away from stocks into crypto investing because it's a lot more lucrative in the right time. But also when it does correct, obviously there's the corrections is a lot steeper as well. So I think the thing to kind of look out for is what is the Federal Reserve looking to do? What are the inflation numbers looking like? And that will give you a good sense of barometer in terms of how what prices or what's going to be expected within the economy and how the financial market is going to react. So to give you some sense, the way to kind of look at this is if they are not able to curb inflation, if inflation continues to spiral out of control, going from 8.5 to 9.5 or 10, hopefully it doesn't go that high, then the Federal Reserve will be more aggressive in terms of increasing interest rates. What they've said is that 50 basis points is the maximum they will increase every single time. They may change that stance and actually become more hawkish and actually increase interest rates to 75 or even 100 basis points, which is unprecedented, and we've never seen that ever before. And so I guess our hopes is that inflation will calm down and that the Federal Reserve becomes more dovish, and then they will not increase interest rates as aggressively. And then what we can see is that gas prices started to go back up again, and we'll start to see a recovery from there. So it really kind of depends on like how things are going to play out. But I guess for all our viewers is the key thing is just to look at, these two indicators. If you're looking at anything else, I mean, these are the two indicators that you need to look at. Excellent. So kind of moving on. Great. Okay, cool. I think I've gone through the correlation of the stock market to the crypto market. We can probably move on to the next slide. Yeah. So I think I've also kind of covered this as well. Yeah. So I think in terms of the other factors, it's already kind of mentioned, the war that's happening in Russia and Ukraine, and then also with the China lockdowns, that's caused a supply chain shock. Which is something that is out of our control, and therefore there's less supply, more demand. Prices naturally kind of go up. You find a new kind of equilibrium in terms of the demand and supply curve. This obviously kind of impacts everything from kind of construction. In Australia, for example, construction costs have gone up, quite significantly. In terms of our goods and services, that the energy, like the electricity that we're paying. Not necessarily in some of these countries, but the ones that are broadly impacted by the war in Russia and Ukraine, where they have to buy energy from Russia, that's also kind of impacted. So these things will obviously kind of take some time to ease up. I think for the China lockdown, my sense is that over time, like they would have to obviously kind of release the restrictions in terms of where the lockdowns are happening, and so that kind of business can actually resume. I don't think the China economy can actually sustain itself with a lockdown, which means that the actual government will need to continue to print money in order to ensure that the economy survives. So at some stage, they will have to kind of reduce that lockdown and allow for air travel to go back in as well. So when that is going to happen, I don't entirely know. But then I think we need to kind of observe as we go along. Fantastic. So that kind of concludes our short presentation. I guess we're happy to kind of jump straight into any questions that you guys have.
Thanks, Marcus. fascinating week. I guess there's never a dull week in crypto, but there's certainly some that are a little bit more going on than others. And definitely, I think lots of different views out there, but certainly unprecedented economic times that we're heading into. I think to get things moving, you've been in crypto a lot longer than I have. With the knowledge that you've seen, what do you see sort of successful or long-term crypto holders do during these times of volatility? Like, what sort of tactics do you see in terms of how to navigate these sort of times?
Yeah, look, I think in everyone's mind is like, so I think in everyone's mind is, when should I buy Bitcoin now, right? Like, when is the right time to go in? And I think the reality is that trying to pick the bottom or trying to pick the top is a near impossible task, or I wouldn't say near impossible, but it's a very challenging task. I think for most people, it's very difficult to kind of do that. And so the best strategy to do this is like, and what I've kind of advised a lot of our employees as well is, if you want to kind of go back into the market, is to do a dollar cost average, right? To actually go in, proportion out your portfolio, say for example, if you split your portfolio out into 5 parts, say, out of 100%, you split it into 5 parts, so 20% each, you can actually go in, right, at certain times where you feel that, that's the right price to go in. And I'm not saying don't go in now, but neither am I saying going all in now. I'm saying if you do want to go in now, right, since Bitcoin has corrected more than 50%, now presents itself as an opportunity to start kind of tipping your toes in. And then what you need to kind of do is really need to kind of observe the market here. And as I mentioned, those two kind of indicators, like that's going to happen next month. FOMC meeting is going to come out next month. Inflation data is going to come out next month as well. And inflation data and FOMC is going to come out. The FOMC is not every single month, but inflation data comes out every single month. So I think those are the things that you just need to do, and you just need to kind of wait and see as how things recover. So I wouldn't put everything in right now, but I guess, if depending on your risk tolerance, I think, you can start to deploy. Now, in terms of, everyone's kind of speculating, but there will be another kind of correction, like we haven't actually capitulated, and everyone's kind of waiting for that capitulation that we saw in like March 2020. And we've also seen that before in like the last bull cycle. Look, the capitulation may not happen, or the capitulation may have already happened on Thursday, right? So I can't give you a straight answer to say that we're already in, unless we actually see a pretty decent recovery above maybe up to 40,000 plus. Then I could say, okay, the end was there, right? So that's why I'm saying, like, I think, it's not very clear right now whether last Thursday was the actual capitulation, right? Some people there's a lot of chatter on the street in terms of that capitulation is supposed to happen at 23,000 or 22,000 or 18,000, right? We haven't hit that, so maybe there is another one. So all I can say is that, look, it may not happen, right? But I'm saying that, like, you should actually kind of start DCAing back into the market. And I think generally, so I've kind of like lived through, kind of two bull markets. One very cold winter, and hopefully this winter is not as cold. It's maybe in autumn, and then it will go back into spring. What I can say is that I think, the difference between the last bull market that I've seen and this bull market is that in 2017-18, it was primarily, if not almost 100% retail driven. This time around, we're starting to see institutional investors coming in. You can see in a big way as well. I guess a good way to kind of look at it is if you can look at, the only kind of listed, regulated, and licensed exchange in the world, which is Coinbase. And you can actually look at their financial performance or financial report, and you can actually see the amount of like institutional volume that has come in to the market. So that's a very good indicator. And typically with institutional capital coming in, there tends to be kind of less volatility. So if you look at gold's a very, very liquid market. It's a $9-10 trillion market. There's tons of trading that happens. And so you can actually see the volatility of gold is actually fairly low compared to Bitcoin. And so with this market here, what I could probably say is that that sort of, the volatility of crypto becomes less and less over time. It was definitely less, the last time. I mean, Bitcoin went up to about $20,000, when its low is like, $3,000, right? So that is a huge drop off from there. I don't think we will see that sort of, drastic correction now. I think that volatility will be less. And in terms of, the kind of the the prolonged bear market or winter, if you want to call it, since the last back in 2019. I don't think that would be that prolonged this time around. I think fundamentally what has changed is that there's definitely more kind of adoption that's happened, and ever since then we have a lot more participants in the ecosystem. We have things like NFT, we have metaverse, we have the whole kind of a crypto economy kind of really emerging. So there's a lot more participants in the market now. And so therefore, I think there's a lot more, there's kind of less there's that kind of less volatility that is there. And I think, in terms of the narrative of crypto, it's here to stay. I mean, back in 2017, 18, after the bull market, everyone thought that crypto was going to go to zero. Thankfully, it didn't. That's why we're still here. So, it went as low as 3,000. So, because it's here to stay, I think, there's a lot more confidence into the system. And I think, looking at Bitcoin being kind of like the oldest of the cryptocurrency, it has never been hacked, right? There's been no records of double spending. And it's been around for, since 2010, so 12 years now. So the longer it stays around, I think there's more durability and confidence that's placed into the actual ecosystem.
Cool. Yeah, thanks, Marcus. I think, we've always seen Bitcoin continue to rise and run and survive through the winters, and, Ethereum's not too far behind in terms of what it's doing. Fascinating from some of the stuff I was reading last week is, despite the consolidation and the volatility, we actually saw the highest inflows of capital into the market in this calendar year, which is just incredible. So I think it is getting more resilient. 100% right that the institutional money that's flowing in, the sovereign wealth, the pension funds, all these people are looking at it very seriously. So I guess it's definitely, in these uncertain times, that dollar cost averaging method can be very valuable. But we have got a question from Bell on Facebook on this same sort of line around, how do you spot an entry point when trading crypto? It can be really tough, but what are the sort of things you look for?
Sorry, could you repeat that question? Oh, what kind of entry point?
Yes.
Yeah. So I think, firstly, I think what I kind of invest in is I typically go for the blue chip. So I don't speculate in kind of, I guess, kind of in the stock market world, we call them penny stocks, right? So I don't do the penny stocks. I don't do the small caps. I typically go for, kind of the blue chips. So your Bitcoin, your Ethereum, things like Solana, for example. Or Polkadot, actually, that's probably one that I've actually invested in, and I haven't, but I don't typically kind of speculate, so I don't kind of trade on a daily basis. And in terms of entry points, so I mean, the way to kind of look at it is, I guess more kind of more specific to where we are now, is how much have we come off from the top, right? And where are we now in relative to kind of other lower points that we've seen? So, if we looked at the last kind of major correction that happened in June, July of last year, Bitcoin went as low as, $28,000 or $29,000, right? And I guess now where we're sitting at today is like 30,000. And sorry, I'm using US dollars here. So where we're sitting at now is like, $30,500. So we're actually at that kind of ballpark low point, right? And so kind of going back to, so in terms of that entry point, again, like this is not a bad entry point, right? I'd say this is a fairly decent entry point because we've seen that kind of entry point before. But having said that, I think, there could again be more potential for a downside. So we just need to be kind of very cautious. So so that's why when I talked about DCAing back in is we would fully deploy into everything right now, but then we would leave some dry powder, we call it, right, for a potential of another kind of downside where the entry point becomes more attractive to you. Now, I don't know where Bitcoin, if it's going to correct even further in the future, I don't know where Bitcoin's going to correct into. So the best thing to do is actually to place orders, limit orders, and you can do this on ZipMax. You can place limit orders right down the actual price points. So, for example, you can put it down at 30,500 today. You can put one at 30, 29, 28, 27, 26, all the way down, right, to say 20, for example. And so when the price actually does correct, you can actually start to clip, these entry points as they go down.
Cool. Thanks a lot, Marcus. So next couple of questions, we actually have a few that are Singapore related. And people are generally asking us, how do you think the most recent market volatility would be affecting our licensing process? And then also a specific one from Pin that's asking us around USDT and USDC interest rates can go up to 7 to 10%. Would there be an issue with the SG regulator? I guess this is kind of in relation to, of course, Anchor, where you could get 20% on UST and kind of the backlash that we saw now that regulators are also looking at the stables in more detail.
Yeah, so I mean, I guess that's a really good question. So the challenge with the regulators in Singapore is they cannot regulate something that is outside of their jurisdiction. And so with, UST, the jurisdiction that it falls under is not within Singapore. What we've seen the regulators do is, for operators, for example, like Binance, who tried to operate in Singapore and they could not meet the requirements, MAS has specifically told them that you need to, unfortunately, you need to leave. And so they're no longer able to accept Singapore customers because they do not meet the requirements. For such cases like UST, is that anyone around the world can actually buy UST. You can buy it on any, kind of decentralized platforms, right, or DEXs. So it makes it harder for the regulators to clamp down on it. They can't necessarily say it is illegal to hold any algorithmic stablecoins. All they are able to do is regulate the companies that are incorporated in Singapore. That's all they can do, and that is the same for all other regulators as well. In terms of the business model of kind of providing yield to customers, look, I mean, ultimately, this is still a fairly kind of nascent business model in the crypto world. It's the same model as in the banking space, whereby banks obviously do lending, and then they lend out, basically deposits that they receive from customers. And so the model itself is not new, but I think in terms of the actual way it's being done in the crypto space, and also kind of the compliance level that needs to be applied, is just not it's not the same as the banking level. So I think this is where I think the regulators will definitely take note a lot more and actually start to rethink how they actually start regulating this space. I do know that the regulators are aware that, not just us, but other operators in Singapore are providing yield to their customers. We take a very conservative approach. ZipMax do not have any exposure into Luna, into UST. We did not deploy any customers' funds into UST, so we are completely clear from that. We had looked at the protocol to be very upfront, but we've decided that it's probably not the right move. And so we go with something that is very vanilla, very safe. We take collateral when we kind of lend. And so this is a very kind of standard model, which a lot of the other, kind of bigger brokerages do as well, such as Genesis in the US. And so a lot of these kind of yield products, I think, for example, with Celsius, it's very difficult to kind of say how they do a lot of their operations. And I think some of these other players in the ecosystem have been impacted by UST as well, because they were trying to effectively get a high yield for all the deposits they're getting from their customers. So, for us, I think, we're regulated and licensed, right, in Thailand, for example, and regulated in the rest of the jurisdiction. So we don't take aggressive risk with our customer funds because we have a liability to the regulators and the public.
Yeah, no. And I think it's great just to cover kind of the risk assessment as well that we do. And of course, there's a certain, aspect with these new industries where the regulator will just catch up. And so it's very important for the market operators to also, self-regulate. What could you share with the community in terms of kind of your view of the difference between USDC versus USDT versus UST?
Yeah, so look, I think actually, before I kind of jump into that, just kind of covering off the last point around, our zip up product, which is essentially you get yield on your deposits. I think one of the things that we've been kind of working pretty hard on at ZipMax is how can we, essentially provide some form of insurance and guarantee to our customers. I think this is at the moment does not exist with a lot of the other players that are providing yield. I think a lot of customers, and rightfully so, feel uncomfortable sometimes in terms of depositing their real money with an exchange without kind of any kind of insurance or kind of guarantee. Now, the thing is with banks, typically, they're backed by the central banks, right? So in Australia, for example, the Australian government backs every single deposit of up to, I think, 250 Australian dollars. Same thing in Thailand, it's up to 6 million baht. Indonesia, same thing, and also Singapore is the same thing. And so for a lot of people, that gives them confidence to say that, the central bank is the backstop. So if a bank fails, right, the central bank will come in and will reimburse every single person of up to a certain amount of money. I think this is this is something that we definitely would like to implement at ZipMax, and we've been working pretty hard. So hopefully we can come up with a solution fairly soon. In terms of your question, Ken, in terms of the difference between USDT, and then USDC. So USDC is basically, kind of run by Circle, the organization that's based in the US and also invested by Coinbase. For them, it's fairly straightforward. I mean, $1 US that they have is equivalent to 1 USDC. They're probably the lowest risk profile. In terms of USDT, this is by Tether Corp. And typically there have been a lot of issues around Tether in terms of whether what is backing USDT is actually a 1-for-1, right? The whole point around the stable coin is you have actual physical currency that is that's backing the actual stable coin. And that's how it's supposed to work. So with the USDT, the issue with them is that not 100% of their holding is actually in the US dollar. Some of that has actually been, invested into US Treasury bills. Some of that has been speculated to invest into other kind of high yield, kind of more risky kind of bonds. So the composition of that is still kind of quite vague and it's still fairly unknown. But in terms of a risk profile, it's definitely more riskier than USDC. And so therefore, I think if you kind of look at the trading pairs, USDC typically kind of trades at a discount to the actual US dollar or USDC. Now with UST, it's an algorithmic stablecoin. So the algorithm is supposed to peg UST to $1 US, 1-for-1. And it's supposed to be backed by, essentially the Bitcoin that the Terra Foundation actually acquired, and also backed by Luna. But the reality is that because of the depeg that has happened, and this is caused by what we know as a couple of big players in the market that have essentially came in and shorted UST to the point where the algorithm does not hold, and because of that, it had caused a depeg and people and basically caused a crash in UST, and then also caused a crash in Luna as well. What we also saw was that there were a lot of arbitragers that were trying to effectively kind of arbitrage away the actual spread. And so that has caused a precipitous fall in UST and also in the Luna token itself. So I guess my kind of advice is everything's all risk of reward, right? UST was giving out 20% on Anchor. That's great. For those of you guys who want to take that risk and get 20%, that's entirely up to you. I would highly advise not to, if you're going to put anything in there, I would definitely advise not to put everything in there. I would definitely look at, USDC as being, the more stable, more kind of regulated stable coin. And I think, the US government as well has been, ever since this event that has happened last week, the US government is definitely looking to step up regulation in terms of how they regulate stable coins. Now, hopefully in the not so distant future, we also have what is called a CBDC, which is central bank digital currency. And this is the actual digital currency that is being issued by the central bank of any country. So I think the best example is China. So China has its own CBDC now, which is piloting. And I think, countries like Thailand, for example, Indonesia has also, mentioned that they are working on it. Singapore has decided not to work on it. And Australia, I think, is still ambivalent about it at this point in time.
Yeah, thanks, Marcus. I think, fascinating the difference between UST, USDC, USDT. I know Tether, there started to be a little bit of concern when it started a very minor DPEG, but actually you can redeem, a lot of people don't know this, you can redeem your Tether directly at tether.io. And there's actually over 7.5 billion US redeemed last week. So that's Tether taken out of the ecosystem, converted directly back to notes and handed back to holders. So yeah, certainly very, very different types of stable coins that get caught up in some of this.
Yeah, and I also like to mention as well as, in times of great volatility whereby there is a huge sell-off in the market, what I've typically seen, and if you can look at the chart of USDT to USD, is that USDT would start to trade at a huge discount to USD. And that is natural because a lot of people are selling, into basically back into dollars. They're basically getting out of Bitcoin, they're getting out of any type of crypto related coin and going back into dollars. And so therefore, if you look at the charts, actually, it's quite interesting. If you look at the USDT to USDT chart, and then you look at the Bitcoin chart, and when you look at, when Bitcoin has corrected massively, UST always trades at a huge discount. So it wasn't just happening last week. So there was no, systemic risk to Tether last week apart from UST, right? And if you look at, for example, June-July crash, if you look at the 2017-18 crash as well, if you look at any like massive corrections that have happened over the course of the last 2-3 years, you can always see that UST always trades at a discount. But what we see is that it just go back to parity, close to parity.
Yeah, I think, look, again, UST is ridden through a number of bear markets, been around for a long time, and certainly is much more open in how it's backed. Certainly not as much as USDC. There's a lot more data around treasury holdings, but it's not backed by Bitcoin and algorithms. It's very much bonds, notes, etc. So definitely very different. Couple of questions on regulation, particularly in Australia, that I might jump into quickly. Probably a bit closer to the Australian regulations at the moment. So we did mention earlier we're not yet licensed in Australia. That is simply because the licensing regime doesn't yet exist. So we are members of Blockchain Australia, which is the industry body association, also members of FinTech Australia. And part of why we joined those organisations was to help really lead the conversation or work with the regulators on what we would like to see implemented into Australia. As hearing from Marcus, we definitely believe that regulation is important for all the countries that we operate in, because if consumers feel more confident and comfortable and have a little bit more protection around it from bad actors, it allows the entire industry to grow. So we're certainly big supporters of that. At the moment, we are registered with ASIC, we are registered with AUSTRAC, and as I said, we're members of those professional organisations. Treasury has recently released a framework that they would like to introduce for regulation in Australia. That's out for consultation at the moment. We are working again with those industry bodies and directly to submit our recommendations and thoughts around those. But effectively, they are looking at a crypto as a secondary service provider regulation, or a CASPA, they're calling it, which would sit under ASIC. So similar to an existing AFSL, but the general view from both Treasury, government and the industry body is that AFSLs are not fit for purpose for crypto. They are for traditional financial products, and things that you can do like DeFi, swapping, trading, all of these types of actions aren't covered appropriately in there. So we are working through those. But I guess maybe one for you, Marcus, on this, couple of questions. I think you touched on it a little bit when you were talking about the insurance. But Coinbase recently disclosed as part of their sort of statements that they're required to do, that if there was a bankruptcy event, potentially investor funds may be taken as part of any liquidation. Now, I think they were saying there that they don't believe that the courts would apply it that way, but they wanted to highlight that risk to investors. A couple of people off the back of that asking similar, if the worst was to happen with ZipMex, how customer funds could be affected.
Yeah, look, I think the short answer is no. We're not subjected to bankruptcy laws on that. So customers' funds will be returned to them. So the company itself has a liability to its customers. We have put that on our balance sheet. And so we would, the customers will rank first, and that all their assets will go back to the customers. In terms of creditors, essentially, creditors will come after us in the case of a bankruptcy, and we'll have to get an administrator to come in. But to answer this question, and look, I think the first part of the question isn't kind of related to this. Like, I think regardless of whether you're licensed or not licensed in Australia, irrespective, I think, if you're licensed and go bankrupt or you're not licensed and go bankrupt, I think the fact is we would, our customers' funds are definitely going back to our own customers. So the creditors can't actually go after our customers' assets.
Okay, I guess a little bit related would be, I know for us, of course, we're a startup and we're very nimble and very reactive as well of the current market situations. Could you maybe share with our ZipMix community what are the kind of remediation plans that ZipMix might have around the most recent market volatility? Are there certain things that are going to affect customer experience or other things? So maybe a bit more like, how's our roadmap being affected by the most recent conditions?
So I think for us is I guess the key part is to ensure that we have a scalable platform to be able to handle the amount of traffic and volatility that happens. I wouldn't say kind of every day, but obviously when there's a huge kind of correction in the market. I guess for customers, we want to make sure that they have confidence in us in being able to deliver what they need to, which is in the time of volatility, if they decide to sell, they want to have liquidity to be able to sell into, and then also be able to withdraw their cash into their bank account, right? I think these are the two kind of fundamental things, right? And likewise, I think, in a massive bull run, when people want to deposit money and be able to buy, we also want to be able to provide it in the most expedient way. And so, we have over the last 2 to 3 years build our platform to be able to handle all that traffic that's coming in. We are consistently trying to scale that platform. Look, I mean, even the biggest players have experienced, these scalability issues because, kind of unlike other tech companies where it's a SaaS product, there is kind of very predictable expected demand coming into the platform itself in usage. But for example, with crypto, it is very unpredictable. And to give you some sense, I mean, in 2020 versus 2021, we effectively grew 18 times. 18 times more or less for every single metric you can think of. And so in terms of traffic, we went from last year, I think in 2020, on a monthly basis, we're probably doing 50,000, 100,000. In 2021, we were looking at, I think at the high of like 8 million, 7 to 8 million in a month. So that there is a huge, that's a very steep kind of increase in terms of usage on the platform. And of course, we're consistently trying to improve that to make sure that, when there's times of volatility, our customers are able to sell and also withdraw into their own bank account. So those are the two things that we focus on.
No, that's awesome. I mean, just in my kind of like decade in the startup ecosystem as well, or in startup land, I do have to say I'm really blessed to be working with such a talented leadership team and also senior leadership team at ZipMix. So that's really awesome. I think also just looking at other projects, right? Would you back them? Which ones are the ones that are going to stick around? I think team always ranks really high up there, So I think that's really great. Also, just kind of a quick plug here for ZipMix Singapore. So kind of the investment that we want to make or continue wanting to make in also in these market conditions, we do always want to invest into new innovative products. So of course, as quite a few of our Singapore customers know, we've got ZipMix Card that has launched in Singapore already. We've launched it first to a small early bird group, but please also go onto our landing page and sign up. And hopefully the card is going to be coming out in the next couple of months. So yeah, that's a quick kind of plug for more people to join our waiting list.
I think I saw Elin in the comments, very jealous seeing the photos of her new ZipMix card. I know the Australian community are hanging out, so looking forward to you guys testing it out thoroughly before sending it over here for us.
Yeah, for sure. I mean, we've already been testing it, and it's great. And I mean, there's also a certain amount of flex, right? You kind of show, and you've got the crypto debit card. Not that many people have that, so that's also awesome. Sorry, Nathan, did you want to cover in something more on for ZipMix card in Australia, or we move on? Sorry.
I think yeah, we're obviously working on that with our local banking provider. Yeah, it's obviously been a great launch in Singapore. The kit looks amazing. It's been circulating on my social media, people pinging me about when's it coming. We are working very closely with our banking provider here to get that live as soon as possible. So we literally work on that every week. So hopefully there'll be some more news in the coming weeks about when we can formally get that into market.
Awesome. Okay, I think just in terms of a few other questions here, we've got a few ones around specifically like product features. So I do know that we had lock or auto lock questions. Also, we had some questions around when are we going to bring in more flexible locking periods, such as 30 days, 60 days, 90 days, I guess what Binance has as well. Did you just briefly want to cover that, Marcus, in terms of kind of lock and like what the product roadmap looks around kind of Zip Up Plus?
Yeah, look, I think we have launched this product for since October 2020. And originally when we had the product there, like when we launched the product, we made it super easy, super flexible. So you could just essentially kind of, deposit and then you just earn the interest. And it was just available. Then we kind of introduced, the kind of the zip lock, which is essentially kind of locking up for 45 days. And what we found is, some customers actually don't like the locking mechanism, and some customers do like the locking mechanism. And so there have been like several requests around, how we can kind of make it a bit more kind of flexible, like the 30, 60, 90 days. I think, what we're looking to do is we want to kind of be more considered and thoughtful around how, what is kind of the right locking mechanism that we want to implement in the future. 30, 60, 90 seems fairly, generic, fairly kind of similar to everyone else. And I'm not saying that that's something that we're just going to just follow blindly, but I think, we just want to get more customer feedback first before we actually kind of implement something, because we just want to be thoughtful about this, and it's obviously going to require a bit more infrastructure uplift on our end to make sure that we have this done correctly.
Thanks, Marcus. I think that's obviously that product's something we're incredibly proud of. We like to have the max flexibility. I think to get our rates on your competitive exchanges, you're locking in $400,000-500,000 in that exchange's token for 90 days, and then you're locking the asset you actually want to earn on. So I'm personally really proud that we've found the best of both worlds, where yes, there's a locking mechanism to get increased rates, but customers have full flexibility on their funds that they're earning on. And given the current market conditions, that's only a good thing for consumers. So we're definitely seeing a lot of traction with that here locally. I guess, in a similar sort of question or frame, Sarah's asked from YouTube, if the bear market is in, which we're not sure it is, but let's say it is, yep. What can you do with your crypto? What's the best way to sort of ride that out with your crypto?
Yeah, so firstly, I would say depending on, look, I don't know everyone's profile, but, I'm making an assumption that some people might take leverage. If you do, please don't. So I would definitely get off any leverage at this point in time, because you just don't want to get hurt. I guess if you have already, then I think, probably start to take some risk off the table. I think, in kind of the last, crypto winter that went through, I think what happens typically is that a lot of the crap gets washed out. So a lot of the unsustainable projects that have fundraised or have kind of essentially fundraised, through their token, they get washed out. And the market really is fairly efficient, kind of telling you that, you don't belong in the ecosystem, or you do belong in the ecosystem. It fundamentally kind of goes back to the core, which is, are you providing a product or service that people are actually using, or are you just coming up with a hype? So I think what we can see is a lot of the hype tokens, a lot of the meme tokens will pretty much die out if we're going to be in a sustained bear market. Unless of course, like Elon Musk decides to tweet again about Doge or Shiba, then it's a different story. But I think, this kind of gives you a very good opportunity now, because a lot of asset prices have actually come off fairly significantly. And I think, what I obviously kind of advise people is just to actually look at like top quality projects, right? If you're looking to kind of reinvest or to invest into these kind of projects, is actually go do some due diligence, like read their white paper, understand what they're actually trying to do, look at what they promise and what they actually deliver, whether they have actually delivered it or not, right? A lot of projects, what I've seen in the last bull run is everyone's promising the world, like, they're going to revolutionize payment, they're going to revolutionize hotel bookings, everything from supply chain, and I think, they have big and bold ambitions. And I think that's the story that everyone kind of gets behind, and they, invest their money. And during a bull market that works, and, you can get a lot of upside in kind of that investment. But, all that dream and story actually falls away when, in the bear market, and if a business can't actually deliver, that's going to be an issue. And kind of going back to Ken's point and around kind of the team, I think team's really important, right? So every project will have a team behind it. Go actually look further and see who the actual founders are, who the management team are, like, are they the right people who are kind of driving that particular project? Or are they, a couple of people that have been pieced together to look good on, the actual white paper itself, which often typically happens. Look at the advisors, find out how active these advisors are, how they're actually involved in the actual project. I think it's like really kind of going through that nth degree of due diligence and making sure like everything checks out for you, right, before you kind of like put your money in. Because I think now is a good opportunity, because, everything is corrected, is a good opportunity to kind of focus your capital into the right project, because those are the projects that will ride out. Like, good example is Ethereum. Ethereum has been through, two major kind of bull and bear markets, right? So, excuse me. So, and they're still around. And look, I think if you look at the Ethereum protocol, I mean, like, look at so many decentralized applications that have been built on it. I mean, one in particular that everyone is familiar with is NFT platforms, right? So, that's like actual use cases as to that protocol. And that's the reason why it has survived through the test of time. I think the other ones, there's some of them that are fairly questionable. So I think, again, kind of like try to do your own due diligence before you kind of invest.
Yeah. No, I think those are awesome. I mean, there's so many kind of blogs out there, rankings or YouTube clips where people have their own criteria of what is important in assessing certain projects. I mean, for me, certainly, team ranks really high up there, utility as well, and then certainly like, can they deliver, right? I think another one is like funds raised. Do you have yourself kind of like, I mean, not a super strict like top three by ranking, like which ones would you say are the top ones? And then do they also apply to NFTs? Because I think that would be kind of segue to our final question that we had around NFTs as well.
Yeah, so to be very kind of upfront, I think like I've been really, I'm not a day trader, week trader, or kind of like a regular trader. I mean, I kind of buy and hold for the long term. So I have been, I bought and held Bitcoin and Ethereum primarily since 2020. So after kind of the last that crash that happened, I kind of went in pretty hard. I mean, I was in stocks as well. So I kind of like went all into crypto in 2020, sold all my stocks and diverted my capital into Bitcoin and Ethereum. I didn't look at anything else because I just wanted to focus on these two, as I mentioned about blue chip. But I have kind of over time kind of looked at, I've diversified into a couple of things. So for example, Solana and DOT, those are the only other two. So really in my entire holding, it's really boring, unfortunately, apart from obviously ZMT as well. So I have like 5 tokens that I kind of really own. That's it. I did not thankfully get into Luna. I didn't get into Mana, or I didn't get into any of the metaverse or NFT stuff, simply because I am not a regular or frequent trader. I spend most of my time trying to build ZipMex. So I just don't have time to really kind of trade on a daily basis.
Cool. Well, and thank you very much for focusing on building ZipMex as well and not getting distracted.
Thank you.
Cool. So maybe if we can just share that final question that we have. So we've got a question from Pun, who's totally new to NFTs. and they just wanted to know about the different utilities for NFTs and how to buy them on ZipMax, how easy it is to transfer them around. And I think, again, good opportunity for us to talk again around our product roadmap, also Zixel, which came out, and some of the NFT plans that we have.
Sure. So in terms of the different utility of NFT. So look, I think NFT is just a technology itself, right? Stands for non-fungible token. Bitcoin is a fungible token, so you can, it's basically like money. Bitcoin's like money, right? So it's all fungible. I think with NFTs, there are a lot of potential applications for what it can be used for. And I think we're starting to see some very interesting things, like, for example, whether it's artwork or whether it's music, whether it's videos, or whether it's like, passes into a concert on the metaverse, for example, or an actual real life concert. I think what we're starting to see as well is, brands are starting to engage into the crypto space by actually providing an NFT for every purchase that you're making in the physical world. So I know, like, for example, Adidas is doing that. I think Nike is looking to do that. So there's kind of like many kind of different applications there, but the whole point here is that the actual NFT that you own is supposed to be unique, and hence that's why it's non-fungible. So it's unique, and so every one of them is different. And I think if we start to see, for example, the P2P, like the P2P sort of NFTs, like, Bored Apes, for example, right? I think, that's the blue chip kind of NFT at the moment. And, every kind of Bored Ape is different with its own kind of unique characteristics. So in terms of kind of visual art, like, or digital art, like, I think that's one carnation of it. I think the other thing as well we can start to see is perhaps even maybe property, where, effectively you can, now, like, we have to buy and sell property, and there's like obviously the title deeds needs to be transferred. And I think we can kind of see a world whereby, every apartment in a condominium can actually be, represented by an NFT and can be traded, right? So that kind of uniquely kind of represents one unit within an apartment. And that unit is obviously unique because it has its own kind of like unit number. So, in terms of asset-backed kind of NFTs, I think that's where we can start to see something really interesting happening. I even kind of moving on to even, like, for example, the ability to kind of trade watches. I know I'm not a big watch fan, but then I know the watch market is fairly huge, and the watch market has also grown quite tremendously over the last 2 years. And watches have their own serial numbers. So, people are starting to invest into watches, not as because they, watches have outlasted the utility itself. I mean, you can buy an Apple Watch, right, and it costs you $600. But why do people buy watches that are worth, hundreds of thousands, if not millions of dollars? And I think they start to treat it as an investment. And so if there's a way to be able to kind of tokenize these watches and be able to kind of trade them freely on a marketplace, I think that would be quite impressive as a form of, kind of investment to buy, a particularly unique watch, and then obviously has like, limited number of watches itself, a limited number of models itself within a particular brand. I think that could also be fairly interesting. So I think there's many kind of different things that, NFTs itself or the platform itself can actually, I wouldn't say kind of disrupt, but also like be complementary to what is already existing in the market. In terms of the transferability, so I mean, at the moment, I think the kind of the very generic or very kind of broad or mainstream kind of usage of NFT is actually through kind of NFT art, right? So which I've already kind of mentioned. So the way to kind of transfer them is you need a Web3 wallet, so like a MetaMask, Coinbase wallet, Trust. So that's fairly easy to sign up. So that's your Web3 wallet. You can transfer that around fairly easily. So you just have to connect your Web3 wallet to the, for example, OpenSea, where you can just, connect it, and then it registers your wallet to the actual platform itself. And then you can, buy and sell NFTs on the platform itself, and then that would actually be registered on your address. And you can also transfer it to anyone around the world. You can transfer your, I don't think you would do that, but you can if you have a Bored Ape, you can actually transfer it to anyone or NFT that you own. So minting the NFT itself Super simple. You can actually do it on OpenSea. We have our own Zixel platform that we're looking to launch as well. So that one, so with that at the moment, you can't actually mint, but so we're actually working with content creators, putting those NFTs there and actually people being able to purchase them, so yeah, being able to transfer from one wallet to another. And that's what we facilitated.
Excellent. Thanks, Marcus. Look, I think we're out of time, but I just wanted to thank all of our community for joining us. I think during these times of volatility, we want to make sure that we're available to answer questions that you guys have, to help support and to navigate you through these times. ZipMex was sort of born in the last bear market, and we've designed it specifically to help people ride out, maximize bull times and then ride out volatility. And that's what our product and suite has really been built around. So we'll definitely be here throughout. If you haven't had your question answered, sorry we didn't get to all of them in the hour we had. Ken and I are always available on the global Telegram and the Telegram in Australia. So we're active in there, happy to answer any other questions you may have. I just wanted to really thank Marcus for coming on and spending some time with us to unpack things way above my pay grade in global economic conditions and help really support the community with what's going on at the moment.
No, it's been a pleasure, guys, and thank you for all those questions. Feel free to ping us if you have any other questions. I'm always happy to kind of engage with the community. But I'd like to thank everyone for their time, and thank Nathan and Ken for setting this up.
Great. Thanks a lot, all. Take care.
Thanks, everyone. Have a great night.
Bye-bye.
Thanks, guys. Take care. Bye-bye.